Hi, everyone, and welcome to Real Talk with Octavia, where we dive into real stories and smart advice to help you navigate life's best decisions. Today, we're talking mortgages, one of the most critical and sometimes confusing parts of buying a home. I'm joined by Dawn Hauser, Q, a seasoned mortgage lender with
20 years of experience.
helping people finance their dream homes. Dawn, thank you so much for being here.
Thank you.
Before we dive in, tell us a little about yourself. What got you into the mortgage industry?
Okay. I am originally from New Jersey, so when I graduated high school, I went into the military and I did 4 years of active duty in the Air Force. And I worked with National Security Agency and had a top secret clearance. So I always tell buyers that I can protect their information, their everything about them. I'm very used to doing something like that and keeping everything about them secured. And I just really enjoy helping home buyers get into homes. So that's part of, how I got into this business was, after going to college and the military and all the things that I did, that I wanted to get into something that was very rewarding.
That sounds amazing. You can keep us safe and keep us safe.
Right?
What exactly does a mortgage lender do, and how are you different from a bank?
Okay. So as a mortgage lender, I work for a mortgage lending company. So a bank generally has just a few products. So if you don't fit into FHA or conventional or one of their portfolio programs, they can't really help them. So as a mortgage lender, we have different options, and we also offer creative financing. So we can kind of look at our box of tools to see which product you might fit into, and if you don't, then we might be able to broker it out with another company that would offer some sort of financing.
So basically, if we have maybe not documented income or like...
Correct. Yep. So if you are self-employed, you might be able to do the bank statement program or the 1099 program, or use your profit and loss statement. And if you're buying an investment property, we can have no income and just use the property's rental income to qualify. So there's just lots of different options based on each person's situation.
The most exciting part about that is that you can work with people that don't have that straight W-2 profile.
Correct.
And that's the majority of us now, especially with people doing gig work and side jobs. And, there's still an avenue for everyone to buy a home.
Correct. Yeah. I do a lot with 1099 employees. I think the best thing about that program is when you look at your 1099, say you made $100,000, they will only give you a 10% expense factor. So I get to count $90,000 for qualifying with just 10%. So that helps out a lot of people, and I use that a lot with realtors. I use a lot, definitely a lot with realtors. Also entertainers, I've had that happen. And then sometimes like medical people are now 1099.
Yes.
So if you're, some sort of CNA or, whatever, working with that medical community, that happens too.
Well, that's amazing. Can you walk us through what happens from the time someone first contacts you to when they close on a home?
Sure. So when somebody contacts me, that initial conversation is kind of getting to know them a little bit, but asking them things like, do you have any money saved? What kind of property are you looking for? Are you a primary, secondary investment, person? We are just kind of seeing what their credit score is. Do they have job history? So that initial conversation leads me to, let them know that, hey, here's my loan application. You can fill that out online. I can help you with that. So once they fill out the application, then I'll do a credit check and then just determine based on income, assets, liabilities, what they want to buy. That determines what they would qualify for. And let's say I can pre-approve you. I'll issue you a letter. You can go shopping, but I also like to tell you what the parameters of that letter mean. So if you're looking at a $400,000 house, I'm going to give you a payment and, keep your taxes and insurance in that range to make sure that your pre-approval letter makes sense. And then as we get under contract, then we get through the loan process of collecting all the documents that you would need to give to the underwriter. And as we get through the process, after appraisal and every document that we need, we're going to get what's called a clear to close. So after we've satisfied the loan conditions, we have our clear to close, You can go to closing, sign your documents, and then you will hand them the keys.
And then welcome home.
Welcome home.
And then I know this is kind of like a little off script here, but
Sure.
If you're getting a mortgage, you get those documents to the lender.
Yes, please.
Right now.
Please.
Stop watching this and go send them that bank statement.
Yes, you don't want me to tell on you to your realtor, because I will. If you're slow at getting me papers,
Where's my bill?
I'm gonna be like, your realtor's gonna contact you, and just the faster you get documents, it just makes the process go a lot smoother. And we try not to ask for things that aren't necessary, but if I'm asking for something, I'll explain why, or how to make it a little bit easier to obtain that document, whatever it might be. My job is to kind of make things as smooth as possible and keep everything on track for the closing date.
And all jokes aside, when you do not get those documents to the lender, you're putting your deposit at risk, because if they don't have the documents, they can't go forward with the approval process. So, what are some common myths or misunderstandings people have about getting a mortgage?
I think some of the myths are, especially if you're a primary homeowner, that I need 20% down.
Yes.
So I think that's a big misconception with all of the down payment assistance programs out there. There's many things that somebody can qualify for. So when I am asking whether you're approved or not, I like to ask you, do you want to put $3,000 into the transaction? Do you want to put $20,000 into the transaction? So I get a dollar amount of what the buyer would be comfortable with taking out of your bank account, or maybe you're getting a gift, or maybe you're taking it from a 401k, and that helps me structure your pre-approval to get us into a position to go shopping and get under contract.
Can we talk a little bit more about the down payment assistance programs
Absolutely.
that are available? Because
Yes.
That's the thing I'm most excited about.
Yes. So I like to joke that I'm the queen of down payment assistance, so that's one of my passions. So when we're looking at different programs, so each county may have their own program, and I can speak for Lee County particularly right now because I was very involved with that. So when we were able to have that hurricane recovery, Lee County was given $1 billion to help. So a lot of that trickled into down payment assistance. So some of that was a Lee Cares program that they got $75,000. Another program is SHIP that they were able to get money. That one's not as defined, but most of the people qualified for the SHIP funds have been getting between $50,000 and $60,000 on a forgivable second mortgage. And then we also have the Florida housing. So the Hometown Heroes is expected to come back in July, and that is going to be 5% of the loan amount to help you with down payment assistance up to $35,000. So different programs, they'll move around. Usually the minimum is $10,000 with Florida housing. And then we also have what's called an FHA zero down loan. So it creates 100% financing with the first FHA mortgage, and then the 3.5%, which is your down payment. That's another second mortgage, and combined that gives the 100%. And you don't need to be a first-time home buyer with that program. So that can help you get into a house if you have little money down to get in, and have the seller pay for all your closing costs, and then you're just out a few $1,000s to get into the house.
And y'all, I know that may have been a lot of information at once. I will drop below in the comments different sheets on each program so you can go through it. And then I have Dawn's number as well, so you can call her to get pre-approved.
Yes, it does get complicated with all the programs. So that's kind of where that pre-approval comes into play when we have that first initial conversation. Then I can direct people to which one may fit them best. And sometimes they have to apply directly with the agency, and then I'll try to get them going with that kind of thing.
I think this is where it goes back to that 20 plus years of experience and working with the lender that knows how to use these programs to work the best for what fits your profile.
Correct. Absolutely.
I'm excited. I was like, I work with a lot of clients that do need the down payment assistance, but there are not a lot of lenders out here that will work with them or even know about them at all. And typically they require more steps.
Absolutely. A lot more work is involved with these files. But because of my long-standing, community involvement with all these programs. Usually directors of those programs will let me know when they have money and if they're running short of money or if they get new money. So we're pretty much in the loop on what's going on.
Back to that queen of down payment assistance. Yes. Queen. I'm going to try to make a crown
right.
Go down on your head. Oh my God, I love it. I need to ask one more thing. What is your typical down payment assistance client? Like, what do they look like? Like, what's their profile?
They can vary in so many different ways. But a lot of times a down payment assistance is somebody that's been afraid to own a home in the past, or maybe they're younger, and they're just getting started and they might not have too much money. Sometimes you have some older folks that have always lived with other family members and, maybe they're ready to venture on their own. So a first-time home buyer can look so many different ways. And it's just somebody that, may not have too much money to put down, needs some real hand holding and direction and reassurance, and let them know that it's okay to be a homeowner. I think that's what a first-time home buyer looks like.
Yeah, and I've had first-time home buyers in their 50s.
Oh yeah.
So there's no age to first-time home buying, guys. Nor should you feel like you're behind the curve if you are 50 or 60 and have never owned a home. Like, that's normal. Okay. We're gonna go into buyer preparation.
Okay.
What is the best thing a buyer can do even before they start house hunting?
Okay. I think a big preparation would be credit. We want to make sure if you are going to want to purchase a house, the lender's really going to look at your overall credit profile. So have you been paying things on time? Have you not had things go to collection? Have you set up enough trade lines, meaning do you have enough credit cards, with very little or no balances on them? Have you had a history with paying your car on time? So all those go into the preparation of, what it might look like in order to get qualified, and credit is very important. Some of the programs like Florida Housing have a minimum credit score of 640. So the other FHA programs, they'll go down as low as 580, but they're going to look at your overall performance of pay.
Okay. So let's say someone has a couple of high balances, but they have this money that they want to use to buy a house. Would you recommend they pay it down? Or would you recommend we pay it down and then use a down payment assistance program? Like, how would you look at that?
I think everybody's different. So I would prefer that you hold on to the money until I determine, do you need to pay something down? Do you need to pay a car off? Do you need to pay some credit cards off? That's something I think an experienced lender would look to see the best way to utilize the funds with down payment assistance to get a person into a house.
Okay.
So it's not a straightforward answer. It just depends. Yeah.
Well, and I have a lot of customers that are like, oh no, I want to pay my credit cards off first and then I'll talk to Dawn. It's like, no, let's just talk to Dawn first.
Yeah. Because I might say, hey, we should, pay off these 3 credit cards and that should boost your score. And I don't do credit repair, but we do have what's called a credit simulator. So when I pull credit, I can simulate you paying off, XYZ credit card. What does your score look like when you do that? So there's different things I can do with the money and the credit scores to see how to get you into position.
What are the biggest mistakes you see people make during the mortgage process?
The biggest mistakes would be letting everybody pull your credit. So if you are in the mortgage, shopping thing, if you go to 1 or 2 lenders and get an opinion, I don't think going to 10 lenders is going to help you at all. So I always say, maybe pick me in a credit union or something along those lines, because when you keep pulling credit, that is going to hurt in the long run. And also some of the mistakes is, don't go out and apply for new credit. So if you're shopping for a mortgage, don't go look for a new car, don't look for a new credit card. Klarna, those pay here, couple payments for a pair of shoes, don't do any of those because those affect our debt ratios. So the underwriter is asking questions about all those sort of layaway things. I don't even know what they're called.
Afterpay?
Afterpay, yes.
Because I see them when you shop now. It's
Yes.
like, oh, you could get this in 4 payments of $99. And it's like,
Correct. And now the underwriter's like, what is this $99 per month? And so we have to ask a lot of questions. So I'd say, don't do any shopping like that. And also, pay everything on time and don't open any additional credit. So if I've pre-approved you for $400,000 with your current debts, just don't open anything else and don't close anything, because sometimes when you close your accounts that you've had long standing, that could actually drop your credit score. So those are all important things, and don't have things go into collection. So if you have a medical bill and you get a collection, that could affect us too. So just be super cautious about all the things you're doing with your credit in that time frame. After you close on the house, you could go buy a new car, you could go buy new furniture if you can afford it. That's the time after the fact. Getting the house and getting it approved and closed is the most important thing.
And if you have questions about, can I buy this or should I not wait, call Dawn. If she's helping you with the mortgage, she will take your phone call about if you should buy this new boat or not.
Yeah. No new boat. Unless you're a millionaire, maybe.
Well, even then, I've worked with clients that are making $1 million a year. They're spending $1 million too.
Oh, that's true. Yes.
It's just like, it doesn't matter about how much money you make. It's about how much is coming home.
Yes.
I guess I want to switch gears a little bit here. How much does the interest rate really affect someone's monthly payment or buying power?
So the interest rates do affect it. I can't say percentage wise, like how does it affect it, but a couple years ago when rates were 4.5%, 5%, somebody affording a $300,000 house was a lot more affordable than at 7% right now in $300,000. So it does affect their buying power, but I think currently our prices are coming down a little bit. So I think that helps people, negate the interest rate because the prices are getting a little bit better too. So interest rates are what they are. Everybody keeps asking when they're going down, and nobody really has a crystal ball at this point. And, we just kind of work with what we have. And, I don't think that should stop people from getting a house. If you're ready to buy a house, there will be opportunities in the future, whenever that might be, to refinance it into a smaller rate.
So let's say we sign right now at 7% or 7.5%, and we want to refinance in 5 years to maybe a 5%. How much does that cost?
For closing costs, you mean?
Or like the total cost to do a refinance?
So that can really vary. So we have doc stamps, we have title insurance. Are you buying your interest rate down? Could it be 5,000? Could it be 7,000? That could be a range, to think about without an exact cost sheet. And I just like to do the math. So if your payment goes down $300 and it costs 5,000, we divide 5,000 by 300, and that tells you how many months it'll take to recover the money.
Like 18 months or something.
Yeah. So usually if it's 2 or 3 years and the rate's good, that starts making sense. But if you have to wait 6 years to recover the cost of the refinance, it may not make sense. So I'm always the math person, even when we're working with interest rates and we're talking about buying the interest rate down. If the seller is helping you with closing cost money to buy that rate down, that absolutely makes sense.
Right.
But if the person's taking the money out of their bank account to get a little bit lower interest rate, that might not make sense to them.
Right. Okay. And I want to encourage you, because Dawn is going to be monitoring the comments on here. If you have any questions about this, just type them in the chat and it will get back to you within 24 hours. How have you seen the mortgage landscape shift over the last year?
I've seen a lot of mortgage loan officers getting out of the business. So I actually think that's kind of a positive, because during the refi boom, we had a lot of people jump in that didn't have a lot of experience, and they were kind of flash in the pan and then they're gone. So I think that it leaves an opportunity for us experienced people to really give sound financial advice through the mortgage process. And obviously the rates increasing has always been a challenge, but we're also seeing a lot of alternative mortgage products like the bank statement loan, 1099. I actually do a lot with manufactured housing. So I see some of the things coming in that could help people a lot that may not have always been there to, assist all types of buyers.
We kind of went over this, but do you see a lot of buy downs and seller credits right now?
I see a lot of seller credits. Okay. So I think that the thing we always have to think about is new construction. Your builders are giving 20, 30, $1,000. So if you have a resale and you're just a resale seller, you have got to think about matching that builder type of, seller contributions in order to help buy the rate down, pay for the closing costs. So yes, I still see a lot of that going on. And that's part of my pre-approval when I'm working with down payment assistance people. I have to be like, here's your down payment, here's how much money you have, and this is how much the seller has got to contribute to make the deal work. So I'll be very defined with that.
On the realtor side, I want to say it's really pleasant to hear a lender that's preparing the buyer. That it's like, no, we're going into this and we need to have this, and this.
Correct.
Or otherwise it's not going to work. I feel a lot of times when I've worked with lenders that aren't as experienced, they are learning along the process.
Yes.
And so it's like you get down to the end and it's like, oh, well, the money isn't working out, or we need to do this or some impossible thing, versus working with someone that's told you at the beginning because they've been through this process over and over again. So I just kudos to you.
Thanks. And I have that conversation if I haven't met the buyer's realtor yet and I issue a pre-approval. I want to get the realtor on the phone. I want to be like, this is how it needs to work. This is the down payment. This is the seller contributions. It can't vary from this. It's non-negotiable if that's how I approve the person. And I've had contracts come back and I'm like, where's the seller contributions? They're like, oh, they didn't give it to us. Oh, I did see that on your pre-approval letter because I'll put it on my pre-approval letter. So the pre-approval letter does guide you. It gives you an interest rate that we approved at, a loan amount, seller contributions, type of loan. So all those things are important. If you're a realtor or you're a buyer working with your realtor, you have to let them know.
On the listing side, on the buyer side as well, but on the listing side, I always tell people that are working with the mortgage, I don't need a pre-approval or which one is it?
A pre-qual is that we've just pulled credit and took everything that you said.
Right.
A pre-approval is we've done more investigation. We've looked at your documents. We've put it through the automated underwriting system. If you are really a unique type of financing, we have what's called a fully underwritten pre-approval. So if somebody is a little questionable, I go that extra mile to make sure the underwriter's completely happy with it.
And for you buyers out there, when your file is fully underwritten, it's basically a cash deal, because you can go to the seller and you're like, look, I'm ready to close. As soon as we have the title back, as soon as we have our inspection and appraisal and the survey, we're done. So instead of waiting during this process of like, oh, am I going to get approved or not? You're already approved.
Yes.
So I think that makes your offer stronger, especially when we're in a seller's market, which we're not right now. But
yeah, but you are right. I like it too, because sometimes people are unique. They might have switched a few jobs. They might have changed their income, a different way they get paid, and sometimes we don't know what it will actually pan out to be. So I do love those fully underwritten files like that for that reason.
Love it.
Yeah.
Highly recommended. So what sets you apart? What do you wish more clients knew about you or how you work?
Oh, that's a good one. I think the fact that I'm very caring. I truly, truly care about a good experience. I truly care about closing. I don't feel like my clients are just a number. I feel that I'm very accessible. I do respond quickly and try to explain everything. And also, if somebody's not happy for some reason, I want to ask them why. Like, what could I do better? Or what was confusing to you? So I think always getting to the great experience, to give great hospitality. I've been reading Unreasonable Hospitality lately, and I just want to treat people like I would want to be treated, and have a good experience.
Well, I completely understand that. I also believe that some of you will never be happy. For some people, you can go over the moon, backwards flip, triple axle, double lutz, cow, and you still aren't happy. And for those of you, God bless you. But for the majority of the people that I know we work with, it's like they are thrilled with the experience, and especially being able to pick up the phone and call someone and they answer. I think that's just the number one thing. And asking for feedback.
Yes.
I'm always like, hey, is everything going okay? How do you feel? Are you warm?
Well, I think that's the problem with some of the big banks and some of the, bigger credit unions. You're just a number and there's just a call center. So, when you're working with a highly touchable realtor, highly touchable loan officer, we're able to give you what you need versus like just send the bank statement and we'll get back to you next week. That's not how we operate. We want to be like involved in keeping you going and encouraged and making sure you're sending the right documents, not that 3 days before closing that we find out we have the wrong things.
Right. I've had a bank decide to change the closing date. I'm like, did you know that's not how the contract works?
Yes.
But at 5 o'clock, they shut the computer down. They're done. They're finished.
Yes.
You really want to work with someone that is invested in you getting the service that you need. If you could give one piece of advice to every buyer in 2025, what would it be?
I would say don't be afraid. I mean, the market keeps telling you don't buy, but I really want to know why you think that. If you need a house and you want to get a secured place or get settled, maybe you're starting a family. I mean, do we want to wait until we have 3 children and we're trying to buy a house and then we're trying to move in? I think like kind of preparing for the future and preparing for the life you want. Living in an apartment and waiting or living with your parents or grandparents or whatever, like that's not preparing you for the rest of what your life could be. That's just kind of waiting for, in my opinion, usually not a super good reason other than the rates might be high. So I think don't wait. If you're ready to move and ready to, get your own house, that this is a good time as any.
Ooh, I like that advice. If you're ready, then the time is ready.
Yeah.
And I think during COVID and in previous years, this may be the best time to negotiate a really good deal.
Yes. I think that some sellers are still stuck in COVID times. So they think their house is worth X and they don't have to give any contribution. So I think that now that we're in a buyer's, positivity, that sellers now have to realize that they do need to bring the prices down. They do need to give the contributions. They do need to help buy down the interest rate. So that's why I do think it's a great time for buyers right now, because we didn't have this luxury a few years ago when COVID was happening. It was all we could do to get a finance deal accepted. And now they're accepting the down payment, they're accepting the terms, they're the time frames. I'm even seeing a lot of like contingent sales, like somebody selling something,
yes,
buying something, they're willing to wait. Before we didn't have that. So that's one of the reasons too, it's a good time to buy. People are all willing.
During COVID, I even forgot how to write the seller credit, because I hadn't written it in 2 years, 3 years.
Okay.
Like how do you, what?
Yeah.
Oops. But now we're just in a completely different landscape. And I think if you've been on the sidelines waiting, this is a great time to jump back in. And I'm not just saying that because I'm an agent and I want you to buy, but yes, I do want you to buy. I look at my market update when I was a burrito last night. And we've been in a buyer's market since January 2024. Wake up. It's not how it was before. Now sellers can pay closing costs, down payment, and maybe your out of pocket is $5,000 or $10,000, if that. And then you're building that equity, and it's something that you own, not something that you're renting.
I have gotten in with less than $2,000 for people.
Oh.
So yeah, I tell people if they have $3,000 to $5,000 as a primary homeowner, I can generally work with that.
You heard it here.
Yes.
From the DPA queen.
We just got to work backwards. How much do you have? What kind of down payment can we get? And what kind of seller credits can we get?
Oh, I love that. Dawn, this has been amazing. Thank you so much for coming and talk with us today. I knew when I saw that clip on Facebook, and I was like, I need to talk to her, because I have people that could really, they're waiting right now because they don't know they could buy something.
Yes.
Because in their mind they think they need $20,000 or $30,000.
Mm-mm.
Two.
Yeah.
I know you have 2,000. Stop buying them Jordans. So if someone needs to get in contact with you, how can they do that?
Usually the best way is to give me a call at 239-464-9455. I'm sure you'll post my card, dawn.hauser@ccm.com. But generally the phone or an email is the best way.
Well, thank you. That was amazing.
Thank you.
And I hope you guys have a good day. If you have any questions, again, put them down. Give Dawn a call or give myself a call. We're here for you.
Thank you.